Okay, hi guys. I will do a quick market update. Okay, so now based on previous presidential election years, you can see that from this website, this isabelnet.com, we can see that Q1, which is January to March, is relatively sideways, and so there might not be much things to do. Might not lah. Whether true or not, I really don't know. Nobody knows. So that we can only trade the chart. But we can see that it's sideways, not expecting any huge crashes. That's the most important thing. And so for those of you who knows how to do position trade, you can then accumulate your position and split it into maybe 3 different entries, so you dollar cost average down in case of a market pullback. Okay. From this HBKS wealth, we can also see that it's relatively sideways. See that the S&P average cumulative return since 1932. Volatility during primaries. Primaries is the time whereby they do the election stuff lah, go to the rallies and things like that lah. But what we can see is that with presidential election years, middle of May, probably middle of May, that is where the market start moving up quite a bit. And then the subsequent 1 year return is about 10% on the S&P, which is not bad lah. Now maybe from the end of March to May might not be a very good time to go long. This one I really don't know. We will look at the charts again. Now looking at the SPY map, you can see that the year-to-date performance, Microsoft has been really strong. It overtook Apple as the largest company in terms of market valuation. Apple dropped by 3% because of some news, I think from last year or something. NVIDIA also very strong, broke the $500 mark. Google also increased, Meta also increased. Amazon just doing its thing lah. And Tesla has been really weak, minus 12%. So Tesla drop is due to the news. Hertz was trying to sell off like 100,000 Tesla vehicles because the charging point was not up and running, or that it was causing some inconvenience. Tesla also having factory shutdown because of the Red Sea issue and things like that lah. Yeah, so year-to-date performance is this. 1 week performance is relatively good. So Microsoft up 5%, NVIDIA up 11%, Google up 5%, Amazon up 6%, Apple move. So then I'm not expecting next week to have such a good response. Even if it has good, if there's a setup and the market is moving, then take the setup, manage your risk. Okay. Now looking at the economic calendar, next Monday is a holiday, so there won't be any trading, or rather tomorrow. Yes, tomorrow is a holiday. There won't be any trading at all. This week is a relatively peaceful week. The only thing that can probably move this market is really nothing lah. Just now I saw about the GDP. GDP will be the week after. Okay. Now we look at the chart. So I'll go to the 1 week chart first, so that it's a bit wider, easier for everybody to see. Now can you see that this portion here, if I were to draw a straight line, this is where the all-time high is, which is at 476.5 something like. If I were to shift this up just ever so slightly, for 479.5. Okay, this is the all-time high. And can you see that over since 2022 we have been making higher lows and higher lows, Will there be another higher low before we attempt? This one I am not so sure. We will never know. Okay. Now, but what I want to draw your attention to is that this 479.5, 480 area is actually quite a strong resistance. Why? Because if I use the trend-based fib extension, and then I draw from here the swing low all the way to the swing high, and then back to this swing low again, and then I drag it up. Can you see that market is currently at this 0.5 fibo extension level? So this 0.5 fibo extension level is a pretty strong level in my opinion, because we are on the weekly chart. I don't expect market to just break through and then just fly like that. No, I don't think so. Anything the market will break through, come back for a retest, bounce, maybe chop around a little bit before moving upwards. That is if market is able to break above. And I will tell you why I think that market is able to break above lah. Okay. I will go down to the daily chart again. Okay, now, oops. Now looking at using the fibo extension again, I take this swing low on the daily chart, swing low to this swing high and back to this swing low. Can you see that the market is also at the 0.618, this 478 area there about, as a resistance? This is the 0.618 resistance on the daily. So it's also a strong level if you see on the daily. I mean, you have to judge based on the time frame that you are seeing. Okay, if you are using a monthly chart, and then maybe the 0.382 will be a very strong level already. Okay, so then you see that there is a triple confluence in this setup, or rather the market is at an area of a triple confluence. Yeah, so I don't expect the market to break through that quickly. If it breaks through, what I want to see that is there's a retest. Let me just delete all this first. If it breaks through this 479 area, okay, if it breaks through, what I would like to see is that I would like to see the market hold above for maybe 2 to 3 days or even a week, come back for a retest, bounce, and then break above this swing high, then that is a valid breakout. If the market breaks above for 1 day with a stupid candle like that with a very long wick, then possibly that might be a false break. Or if it breaks out for 1 day and then the next day it plunges back down, then that is a false breakout lah. Okay, but then the chances of breaking out possibly could be a little bit higher. Why? I go back down to the 1 hour time frame. Okay, so can you see that if let's say down here, right, can you see that the time whereby the market is attempted close by 1, 2, 3, and we are making a higher low down here as well? Will this break out this week? I don't think so. Okay, but what I think the market might do, it might probably just continue to chop around here. Okay, it might probably continue to chop around here before breaking out. Maybe break out the following week. I don't know. The market will remain irrational longer than we can remain sane. So then what we can do is we can only trade the charts lah. Yeah. Now, in case of a market pullback, where can the market pull back until? Let's just take our fib retracement. If we were to just do it on a 1 hour chart, we take the swing low to the swing high. Okay, we take this swing high first, okay, because I want to show you something. Can you see that the market actually pull back to the 0.5 area and it bounced off? This shows a sign of strength. If it go to the 0.5 area and then it chop and then it rejects the 0.382 and then it comes back down the 0.618 and after that it bounce around and then after that it break below, okay, then the market is weak lah. Yeah, but the fact that for this wave it can go up to here and then come back to the 0.5 to break above and make a higher high down here, the market is relatively strong lah. Okay, so let's just take this portion as well. Okay, so then where can the market pull back to? Again, if it pulls back all the way to the 0.382 area, I won't be surprised. Even if it pulls back to the 0.5 area down here, I won't be surprised. Which is from the ending price all the way to here, this is about there 1%, there about 1% fluctuation. Nothing to be worried. Okay, nothing to be worried about. And then if we were to look at the slightly bigger time, the slightly longer time frame, actually if you ask me, I also don't know where to start the fibo because there's a gap here. If let's say we just take it from the start of the move all the way to here, all the way to here, can you see that the market pull back close to the 382 area and then it bounced off, which is pretty strong. From here all the way down is already 2+%, which is not the magical 5% magic number as a pullback, but then acceptable lah. So then if we were to just extend it over here, the market might pull back down to the 0.236 area or the 382 area, and then after that continue to bounce off. That is completely fine. Okay, now we move on to QQQ. So now QQQ, can you see that the market came back up to do a gap fill down here? Enlarge for you all. There's a gap fill down here and then we tried to break above, but market couldn't close above, and then now we are back here lah. Yeah, and then the market pull back to this way, come back, it pull back to near the 0.618 area, to which this uptrend is still intact. Okay, now if let's say the market does actually breaks above this gap fill area of 409410 there about, where can the market go to? Where can QQQ go to? I don't expect QQQ to keep flying like that, but we just use the trend base. Again, take your swing low to your swing high, and then after that to your swing low again, drag it out. Where is the one level? The one level is 425 there about. Okay, and then can you also see that beside the gap fill, we are also currently at a resistance level of the 0.5, the 410.5 level, the 410.5 fib extension level lah. Okay, so then what will I want to do? Basically, I am looking at this trend line. From the swing high here, you just draw a line across. If the market is able to break above this line, then if there's a swing trade set up for the tech stock, go ahead and take it. Yeah, so then you can break above, maybe come back down for a retest before moving upwards, and then hit the 0.618, chop around these two areas again for a while before going higher lah. Okay, that is one scenario. But then if let's say the market somehow breaks below this trend line, the upper trend line, I just did all this first, just break below this trend line, then possibly we will just have some very choppy action again. Based on backtesting, February can be quite a choppy month with no direction, one day red, one day up, 1 week green, 1 week red. It can be very choppy. So if possible, maybe close out some of the swing trade position before February if you are profitable, and then just leave the rest to run. You want to close 50%, you want to close 75%, that one I leave it up to you lah. Okay. Now, if we talk about Tesla, I am in a position, I am not expecting my stop loss for this trade, okay? And the reason why is because, okay, so Tesla has been plunging because of news, okay? And so once the news is priced in, they generally recover quite quickly. And I would like to point it out to you that, can you see the RSI down here, my purple color, the purple color line on the cursor down there? So this, I'm on a daily chart. Can you see that this is where Tesla was oversold? This is where Tesla was oversold. What did it do? It recovered in the coming days or weeks. Can you see down here as well, where Tesla was oversold? Of course, when it oversold doesn't mean that it will recover. It continue to plunge down a bit more, and then when it reaches this area oversold again, which is down here, then you see what did Tesla do. Tesla also slowly recovered lah. Now Tesla is again at this oversold area, very close to the oversold area, which is down here. So usually before earning, they might do a bit of a rally. Okay, if it doesn't, I will monitor this position, and then if it really still doesn't move next week, then I'll just cut my losses. Yeah. And I'm prepared to take a bit of a bigger hit for Tesla, taking into consideration the RSI that is oversold lah. Okay. Now I would like to take your attention to the US 10-year U. Can you see that previously I drew this for you guys, which is US 10-year U was in this channel, and then it went sideways. Now it break out, retest, and then it plunge. So can you see that this is the 3.97 support? The 3.97 support, once it broke out, it came back for a retest as well. Down here is the retest, and then after that now it's coming back down. So can you see SPY? What is SPY doing? SPY is going up, while the US 10-year U is coming down. Sorry, US 10-year U is coming down. Yeah. So then where is the next level of support for the US 10-year U? Somewhere down here, which is the 3.9 area. Okay, let me just delete this again. I'll draw it for you. 3.9 area there about. Or down here you see this one, this one, this one, this one, this one. Or alternatively, if you want to look for down here with the 3.89 area also can, but I will take the 3.9 area. Expect the 10-year U, to continue chopping around like that, and then that time they retested and reject, so then it might chop around before going downwards. Yeah. So then for this week, try and remain neutral. Don't be too overly bullish. Don't anyhow buy. Okay. If you were to look at the EMA 20, can you see that EMA 20 has been proving to be quite a good level of support lah. Yeah. So what I hope lah, I personally hope or the market will do is to just chop around a little bit, so that we can draw our downtrend line and wait for a good breakout. That will be the most ideal situation. But if SPY go sideways, one day wait, one day green, one day wait, one day green, then consolidating around this 479 area is also a good thing. Okay, why is it a good thing? Let me show you why. Wait, I want to find something first on my phone. There's this thing called a breakout sign. Alamak. A breakout sign. So where is that picture? Where's the picture? I might breakout sign, trading, swinging time between price touches. Yes, this one. Okay, so you see that the candles have been very close, getting closer and closer and closer before the breakout. Isn't this what SPY is doing? It is getting closer and closer and closer between the price touches. And can you see that it is also making higher low? SPY is making higher low. Higher low, it might come down, make another higher low before breaking up. We don't know, but we just be prepared for this situation lah. And then if there's a trend line break again, and then that will be your key sign to go long. Okay, so trade safe, manage risk, and watch the chart. Don't be too kanchiong, and then wait for the sign, wait for your setup. 加油！